You guys have heard me talk about my story before. When I got started trading penny stocks, I lost all my money within about 13 days. I think it was 11 days. Within 2 weeks, I lost all my money trading penny stocks when I got started when I was 14 years old. Then I had no money left, and I had to learn how to invest properly, how to do it the right way. And I took the time to learn what mistakes I made, and they all were very easily avoidable. I'm embarrassed to say, but they were easily avoidable. And I made all these mistakes, and I learned how to do it right by reading all sorts of books and doing different studies of masters of technical analysis from Europe. And at the end of the day, it trickled down to the point where you have to look at every aspect of a company when they're smaller and when they're more likely to be vulnerable to big events. A small company, if they lose one customer, they get one lawsuit, if they have to spend a certain amount of money on marketing or research and development, that can actually really impact the company. Unlike when you're dealing with a big stock like McDonald's or Microsoft, smaller companies are way more vulnerable to small changes, little things, and that's what gave birth to the leads analysis process, because it was like buying a used car, so to speak, where you want to look into every aspect, not just the color. You want to look into every aspect because any one of them could derail the whole investment. For example, you buy a used car and it looks great, it's never been in an accident, and you're driving along and a piston breaks in the engine, then that's a lemon, basically. That's going to take down the value of that car immediately and significantly. This is what to watch out for with leads analysis, but it's also going to steer the way towards finding those really good quality investments that are strong on all fronts and all points, and that maybe compared to larger companies, they're just as strong or stronger, and therefore they will open up the way for the shareholders enriching themselves because the stock price will increase. So I'm going to walk you through all of this, but it's important to understand that leads analysis, the concept overall, is sort of like a recipe. When you're making some great cake and you say, does this recipe call for more icing or more flour? Maybe it doesn't. So there's no checklist. There's no, yes, the CEO needs to be A, B, and C, check, and then therefore it's a good investment. You need to look at every aspect and weigh them all together. If there's 100 things on your checklist that you decide to go through with the leads analysis process, you may find that you don't get all of them. Maybe you have a checklist of every possible thing to look at in a company, and you can look at them one by one, but you're not going to find a stock that has every single check marked off that list. What you want to do is find the stocks where you can say, okay, well, they don't have this, but they have that, and that's still going to outweigh the negative because the positive is that much greater. You need to look at everything, take a step back and say, okay, there's some places where it fails, but these places where it succeeds are monumental enough, strong enough, compelling enough that it's a good investment at this point. So let's go through it really quickly. This is just a summary of the concept of leads analysis. So right now we'll just keep it general, just to go through it real quick. So if you go to peterleads.com, you go up to the section here that says Learn, and make sure to check out this if you haven't yet. And then you go to the leads analysis page, and it's going to show you, this is just the online free brief summary of leads analysis. This is available to everybody. The way leads analysis works is that it's 80% fundamental analysis, 10% technical analysis, and 10% what I call third level analysis. Fundamentals are basically everything about the way a company operates and its future prospects. So for example, are their profit levels increasing? Do they have earnings? And what is the trend of those earnings, especially compared to other competitors in the exact same industry? If this company's earnings are growing 10% a year, is that good? No, not if the entire industry on average is growing 30% a year. So even positive growth like that is actually going to be a warning sign. These are the types of things that you're going to learn that'll help you see the markets a lot differently. There's trends in the market that the business operates in, and there's things such as barriers to entry. The harder it is for a company to operate in that space, the better for the companies which are already established, and the worse it is for the companies that are not in that space, that are trying to be operating there. So if your company is a nuclear reactor inspection agency, it's really hard to get into that industry. You can't just show up one day and say, I'm also going to run a business that does that exact same thing, because there's so many loopholes that you're going to have to go through, so many learning processes, everything. It's just ridiculous. Some businesses have really high barriers to entry, others have very low barriers to entry. For example, a lemonade stand, that's incredibly low barriers to entry. A t-shirt company where you make t-shirts for people and send them out over the internet, very low barriers to entry. And the good stuff we're going to get into is the financial ratio trends. We're going to get into all the financial ratios, the ones that work out best for penny stocks. Everything we talk about here is going to be detailed step by step in much more depth later, but if you have sort of a summary or introduction to it, when you get to the point where you're actually getting into the more granular aspects of this, it will probably absorb a lot more easily if you go about it first having a brief introduction. So anyways, there's a whole bunch of points here, and we're going to get to all of them. And the fundamentals are the biggest part of this, because as we mentioned earlier, with penny stocks and really small companies, they're so much more vulnerable to all sorts of influences, so that you want to look for the strength and financial health and longevity of a company before you're going to look into a lot of the other aspects. And the way to do that is to focus on the fundamentals. Can they meet their bills? Do they have enough money? What does their balance sheet look like? How fast is money coming in? How much are they spending? What kind of alliances do they have that is going to help them get money from secondary sources, such as investment bankers? And then we get into a lot of fun. This is more used with leads analysis to find, after you've found a good quality company that you uncovered and put your analysis into, that shows you from a fundamental perspective, and you know it's a good company and that it should grow based on increases in all sorts of aspects that really matter as price drivers, then you can get into technical analysis, which is going to help you pinpoint good buying and selling points, prices, and opportunities. And there's lots of things you can look into, and if you combine the technical analysis aspects to the fundamental successes, then you're going to be dealing with picking out the strongest, healthiest companies at the absolute opportune price points. You're going to know when the stock that you bought increases in price. When should you take your profits? There's very specific aspects to the way a stock trades, which are going to reveal to you when you should be thinking about getting out of a position. And then my favorite, and we'll get into this so much because I love it, is third level analysis. And I've always been a big fan of business. I'm an entrepreneur since I was a child, and all of this stuff is what you can talk about a little bit more of an advantage for a company. We're talking about not just unique selling propositions, which every marketer in the world knows about, all that stuff, but we are also talking about the positioning of a company or a brand, the awareness of that brand, the footprint the company has, the potential footprint it could have if they can take more of market share away from their competitors. We're going to get into all this stuff. This is my favorite aspect of it, and that really puts the icing on the cake, so to speak.